with you all in the near future.
The government's decision to provide an alternative income tax calculation, one that leaves out exceptions, has prompted investors to turn cautious on life insurance players. Indians have often chosen to invest in tax-saving insurance schemes and continue to do so. So are life insurers looking to rework their offerings? What's the impact of this? Joining us now to talk about that is the MD and CEO of Max Life Insurance, Mr. Prashant Tripathy. Mr. Tripathy, good having you. Thanks so much for joining in. The standard question first up, the budget and the impact on the value of new business and the EV due to DDT as well as the exemptions.
Why don't I take some time to talk about all the perceived impacts of tax changes. Even before people registered DDT and people registered its impact on VNB and EV, you would have noticed that there was a sharp reduction in share prices when the bonus was being presented. So what happened was people, when the new personal tax presented and it was shared that under the new regime there will be an option to use the deductions and exemptions, people perceived that the ATC exemptions, which are there for a bunch of savings products, including life insurance, is going to go away. And market reacted really negatively, thinking that the big incentive that life insurance companies had always enjoyed in form of ATC is going to go away, and hence there will be a big impact on the new sales generation capabilities. I think that was a big reason. And then, of course, there was more discussion around DDT and its impact on VNB and embedded value. So I will take some time to talk about both these elements. On the first one, I think slowly everybody is realizing, and it's come in several publications, and we have done our internal math to see that if you are a saver and either you are an employed or self-employed person, what is more beneficial to you, especially for the target segments that we go to. We go to people who are 30 to 50 years, 30 to 60 years of age. That's the chunk of our key target segment. I think when you start to add up all the deductions and exemptions, and really the four large ones are standard deduction under Section 16, the ATC for 150,000, the house rent that people save on, their deductions of under NPS scheme, their deductions and exemptions with respect to house loan and the interest on that. If you start to add all that, it is quite clear that people are better off being in the previous regime, where ATC is a very relevant thing, as against moving to the new ones and leave the benefits, all the exemptions and deductions. So my takeaway hence is that for a large or almost all the customers that we go to, the impact of this change of considering ATC or not considering is quite immaterial, because people will continue to enjoy the benefit of exemption and reductions, number one. Hence, the impact on new sales should be negligible. We also must understand that life insurance policies enjoy tax benefits also in form of proceeds, which is Section 1010D. That is going to continue the way it has continued. So there are two attraction points. A, you get a tax benefit when you invest, and you also get a tax benefit when you receive the proceeds. The receipt of proceeds and the tax benefits on receipt of proceeds is intact, and hence the attraction with respect to tax stimulus with regards to life insurance is going to continue, and hence that's another reason why there should be marginal to no impact in terms of new sales generation. Now, coming to your point on DDT and its impact on VNB and its impact on embedded value, I looked at that actually. My sense and computation actually says that you're going to get a credit of the dividends that you receive in your hands versus dividend that you pay out to your shareholders. And if you were to look at the record of last 5 years, our dividend paid out is higher than the dividends that we have received. And hence, really basis the last 5 years performance, there shouldn't be any impact on our VNB or embedded value. But if we were to look at and really create a worst case scenario where we are not declaring dividends, etc., I think the impact on margin is going to be at an outer bound, close to about 50-60 basis point. We are still doing the maths to get the right value. And if we were to look at the embedded value, again the worst case scenario, close to about about 1% on embedded value. So we are looking at about 3 to 4% impact on of margin, which means our margin last year was 22%. 3 to 4% of that, not the absolute percent, but 3 to 4% of that, which is close to about 50-60 basis point, should be the impact on margins, and about 1% impact on the embedded value. Again, we will do the math, but the point that I'm trying to highlight is these are not very significant impact which could drive the share prices down to the levels that Saturday saw. I'm very glad that the market slowly started to do the maths, and there has been some recovery in the stock, especially for Max Financial Services today, and hopefully all that should get recovered.
Tripathy, you are saying that the impact is almost negligible pre-budget and post-budget for your company.
I didn't quite say that. I just said that it is marginal, less than on embedded value basis about 1%, on margin basis about 50-60 basis points. So is 50-60 basis point relevant? Yeah, it is relevant, but is it large enough for us to run helter-skelter? The answer is no. Especially for Max Life Insurance, we don't have a large ULIP portfolio. That's where dividend or incidence of dividend is very high. Our total size of our book, and ULIP as a percentage of that. ULIP is a much smaller percentage of our total book. So, and hence the impact is going to be smaller. If we were a very large ULIP player, maybe the impact would have been more, but our ULIP is very small compared to the large players.
Okay. Would you be able to tell me about that? The ULIP's portion, has it been growing or has it been on a decline for you?
No, it's not been on decline. It's growing, but it's not growing hugely rapidly. I think, if I'm not wrong, of the portfolio, I think we reported close to about, and I'll have to come back with the right numbers, of the 60,000 crore book that we have, around or 65,000, around 17,000 crore will be ULIP, and I will update you, but it is a much smaller percentage.
Okay, I must say, then Monday has shown a smart recovery for your stock, but it's not showing as much for the other stocks. Others are up, but maybe not as much as your stock is, certainly, Mr. Tripathy.
We have one more reason. We are significantly undervalued. So we are very significantly undervalued. If you were to look at our embedded value multiple as a calculation of our valuation, we are significantly undervalued. So that's the reason perhaps the impact won't be very large, because the impact is already very large.
So why is this undervaluation, Mr. Tripathy? Is it because of an upcoming deal that the market believes, or some other factors which might be hindering or be proving to be a hindrance to the valuation?
So the large reason, as the market knows, is I think the market is expecting that we will have a long-term understanding with Axis Bank. Our current arrangements are due for renewal in September of 2021. So market is expecting that we'll go back, giving visibility for a longer-term deal. So that once those things were to be sorted out, I think the valuations will improve.
Okay. Can you dwell on that bit about the Axis Bank piece? They're going out. They've now gotten into tie-ups with some of the other insurers like Bajaj as well. How does that impact business and the long-term relationship?
Yeah, Axis Bank is a very, and Max Life Axis Bank relationship is a very valuable relationship. Together we have grown. We have demonstrated to the market that two partners come together, work together, they can create magic. So far we have done more than 10,000 crores of new sales with Axis Bank. So I think it's a win-win relationship that we have, and hence we will do whatever it takes to make sure that that relationship becomes longer and more fruitful and a win-win for both the parties. As far as some of these analyst reports are concerned, the analyst reports actually work on different scenarios and different possibilities, and one should keep all those possibilities in mind. But as far as Max Life is concerned, we will work really hard to make sure that the strength of Axis Bank relationship achieves newer heights, and we do continue to do well. As far as other bank assurance relationship that Axis Bank has explored, those things have to be maturing, and we will see how that plays out. Standing now, it will be very hard for me to ascribe any numbers or values and outcomes. We are focused to make sure that that the benefit of the relationship that Axis Bank and Max Life Insurance have continues to accrue to both the parties, and this relationship becomes even stronger.
Okay, how is business looking for you, Mr. Tripathi? Your peers who have declared the results are sounding very confident about the next 12 months.
Yeah, I can see the optimism. I can see the numbers. If you were to look at people who have published numbers, all of them are growing their VNB upwards of 20%, which is a good news. New sales is growing for the industry. I saw the numbers for first 9 months. The private industry has grown, close to 16%. Any number of that kind is really a positive news for the industry. Of course, there are varied, types of impact that the budget may create for different companies, but in my understanding, none of these impacts are very large, so that it can create some bit of roadblock for any of the players. So as things stand, the industry is in good shape. It is growing. It is doing well. People are improving their margins, and it is one of the shining stars in today's environment.
Okay. How do you view the LIC IPO announcement? Because that's a large peer that is coming in, will attract capital flows. Some people believe might even attract flows outside of the current incumbents into the new entrant as well, because it's an attractive proposition, I would reckon. How do you view it?
I think it's a welcome move, actually, and it's a bold move to give transparency to an large organization like LIC, allowing access for the investors to make an investment in an institution of LIC's caliber and credential is really a wonderful thing to happen. While I understand that people allocate money for industry sectors and etc. and as a part of portfolio, but I think with respect to where the market is today, Indian market has far more potential depth that some of these companies will be able to attract more and more money. I mean, if you look at, for example, the valuation of the life insurance, the 3 or 4 listed life insurance companies, everybody's value has gone up by 30 to 40 to 50% in last 6 to 9 months. Now, going by that logic, it is quite clear that people are taking out money from other sectors and making investment in life insurance where growth is. And I'm sure with the listing of LIC, that trend will continue. So is it a good news for the industry, life insurance industry and life insurance listed players, or a bad news? I will rather be on the side of this being a good news.
Okay. One last thing with regards to your promoter actions, Mr. Tripathi, the pledges, they have come off a bit. Any plans to reduce those pledges further from where they are? And the pending deal, I know you can't give me a specific answer, I understand that completely, but can a transaction happen in the current financial year? So
I think our promoters have gone quite public to share the intent that they will like to reduce the pledge, and they will work on it. That's something which has been publicly announced, and I'm sure promoters must be working to do that. With regards to your second question about deal being ripe and where it is and where it will take place, really, I have no significant comments to offer because I work in the operating company. These are matters of shareholder discretion, and we just have to go with the decisions that they make. So really, I have no comments to offer on your second question.
Never mind, we'll talk about it once the deal does happen. Mr. Tripathi, take a moment to thank you for joining in today and giving us your perspective. Really appreciate your time. That's Max, and the last 2 days has done very well. The management believes the stock is undervalued, and maybe that's why the reactions are very strong. but no comments as far as the upcoming deal. Just about 1% higher, was up about 8-9% in trade yesterday as well. Max, this is Max India, but Max Life too has done Max Financial Services, 487, 2% higher, was up about 7 or 8% in trade yesterday as well. Let's move on to a set of earnings, and that will come up after this very quick break. So stay tuned to BloombergQuint Live.